Happy Monday to you. Thank you so much for joining us today. I'm Marlon Bowling, your tour guide to the ag commodities. Well, we have a full trading week upon us, and it'll be interesting to see how the markets react this week after a compressed week last week with that holiday on Monday. Man, oh man, did we have some wild market gyrations in the trade. We have Brian Hoops on the line. He's with Midwest Market Solutions. He's based in Springfield, Missouri. And Brian, I see we had a little bit of a bounce back in the grain markets overnight. I checked the wire here just a moment ago. I did not see any flash sales announced this morning. Did you?
No, unfortunately, there was not any export business overnight, Marlon, and good morning. We did have a lot of news overnight, though. However, it looks like the Russia has bombed an export terminal in the Ukraine, and it's a pretty strong signal that they're not going to allow any Ukrainian exports of grains, wheat, corn out of their country. And that's what really rallied the wheat market substantially overnight. Now, we did back off our highs a little bit, but corn and wheat rallying off of that news. Some of the extended models are putting in a hotter, drier forecast, and that's helping corn to rally as well. That 8 to 14 day is looking below normal precipits and above normal temperatures at this time. So a little bit longer term bullish forecast, but of course there's quite a bit of rain this week and in the 6 to 10 day that's going to kind of minimize that drought impact. So it may take some time. I think corn is probably range bound right now, chopping around and trading it within a trading range here. I think July beans higher overnight as trade is hoping that China will increase their buying as they come out of their COVID lockdown. And we saw crude oil rally to new highs overnight before backing off into the morning hours. So all these markets kind of interrelated, looking at the same things, problems with Russia, Ukraine, China, hopefully seeing better demand trends in the weeks to come.
Interesting that you talked about Russia bombing a Ukrainian port. And last week it was all, you can trust us, we'll allow shipments out of there. Heck, we're good for that. And by and large, most of the analysts I spoke with last week, they said, why would anybody be that trusting about something like that? And now here is your proof here this morning. And so we did see that rebound overnight. Let's take a look at where we were at the end of the Globex trade. Now we'll get underway with the daytime session here at the bottom of the hour, of course. So July corn finished up last night 8 3/4 higher at 7.35 3/4, and December was up 10.5 cents. Meanwhile, in that soybean trade overnight, we had July 9.5 higher at 17.07 1/4, back up above $17, and you had November closing 9 higher at 15.36 per bushel. Then you get to that wheat, which had a wild week last week, and we had July Chicago trading 36 3/4 higher at 10.76 3/4. In Kansas City wheat here this morning, we had July 37 higher overnight at 11.58 per bushel. And look at where it got for the high overnight, 11.73 1/4. And it closed off of that by about 15 cents, and it was still 37 cents higher. So that was quite a move in the Kansas City market last night. Spring wheat trade, here you had the July 32 1/4 higher at 12.24. And there again, that was about 15 or 16 cents off of its overnight high as well. So Brian, on this wheat trade, when you have big up moves like that and you have harvest already up to Oklahoma now, isn't that going to be like pushing a rope uphill trying to get the market to rally during harvest?
Usually it is, Marlon. I think this is kind of a reaction to what happened between Russia and the Ukraine over the weekend. It's hard to really trust these overnight markets. I don't know that you can fully trust them. We are, getting some harvest data coming into the marketplace. Hotter, drier weather forecast in the longer term for the plain states, but we're going to have a lot of moisture through this week that could slow down some of that harvest, at least initially. So yeah, it's going to be difficult to sustain rallies here in the market. We're really not competitively priced on the export markets. That's been evidenced in the last several tender offers that have been seen. Egypt a week ago, where we were not even close to coming into any of the export business. So yeah, it's going to be hard to really build a fundamental case for a big rally in the wheat market at this time if we're not exporting the wheat and we're already starting to harvest wheat.
Okay, well, Brian, we'll talk about our livestock trade and the setup for this week's market action when we come back in a moment. Well, we're back talking with Brian Hoops of Midwest Market Solutions. And Brian, before we get into our livestock trade, let's talk about what was occurring overnight here in some of these outside markets, because sometimes that can have a bit of an impact here on our livestock business. Let's take a look at the Dow overnight. And it was 244 points higher at 33,132. And the U.S. dollar index, which way did it go overnight? Well, it was actually down 105 points at 102.055. That's on the June futures contract. And you alluded to the crude oil trade here a little bit ago. It's finishing the nighttime trade here about 18 cents higher at 119.05. Kind of in the middle of its trading range, and everybody has been focusing on what's been going on with the diesel fuel prices and, of course, regular unleaded gas. Well, July diesel fuel prices on the board, anyway, were down about just 0.8 of a cent, still at 427.3 per gallon. And from what I understand, we made more new record highs across the country in gas and diesel prices again over the weekend. Seems like there's no end to this. So let's take a look at the live cattle. We ended up Friday with the market mixed here, Brian. We had the nearbys under a little pressure, the deferreds a little bit higher. Let's pick out August Friday. It was down 27 cents. Over on the feeder cattle market, they could be sensitive to what goes on in corn. Now, Friday, August feeders were 92 higher at 173.87. We'll see what they do this morning if corn stays higher. Lean hogs, June was up 15 cents, but the active July was down $1.42. And look at August, down $1.70 on Friday. So mixed signals coming out of the livestock trade late last week here. Brian, what are you looking for this morning?
Yeah, I think initially we're going to see a little pressure against the feeder cattle market, maybe some of the front cattle as well, but certainly feeder cattle are going to react to the higher corn market that we're seeing. We had June options expire on Friday, and that did pressure the front month live cattle a little bit going into the close. And today we have first notice day. Now, I don't expect to see any deliveries against June futures as cash trade is much higher than where the futures are. Cash is called fully steady this week. Packers, it look like they're putting together another big kill. And it looks like, we could be setting up for like 770,000 head kill week again this week. That's certainly a positive. We're not backing up any cattle with that type of slaughter numbers, and it shows that there is decent demand for the cattle. So at least initially, probably going to see some pressure against the feeder cattle. Could drag the live cattle down along with it. But if packer demand is as strong as what we believe it is, they're probably fairly limited for the the summer month contracts.
Okay, Brian. Well, we'll find out here in about 6 minutes or so on what the trade wants to do. Thanks for helping us navigate the pre-open here. Brian Hoops of Midwest Market Solutions with us here on a Monday morning. We're about ready to begin. Janet, back to you.